Here are my honest thoughts around what's going to happen with property prices, where interest rates are, and why I would hope for one scenario over the other, especially being in business, but also having a large portfolio. If you guys are interested in what my thoughts are, then definitely keep watching. Hey guys, my name is Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. I'm going to talk to you unfiltered. There are no graphs and there are no stats. This is completely my own feelings, my opinion of what's happening in this market, how I'm personally feeling, and being involved in the market, speaking to so many people, as well as the staff members that work at Search Property. I wanted to give you guys an idea of where I think the market's headed. Now, I want to provide you as much context around why I think a particular way. I provide a unique perspective because I not only have a personal portfolio, which I've been building for almost 12 years in property, but I also run one of the fastest growing buyers agencies. So I have to look at the property market with two lenses. One is what happens to me personally and what does that look like for my property and how do I go and continue building my wealth? And then I also have to see the sustainability of the buyer's agency. I need to see how much staff I can take on and if there's volatility that's coming in the next 18 to 24 months. Now, the good news for you is that whether the buyer's agency's around, whether I'm still buying property or not, I'm still gonna be here on YouTube for the next 20 to 30 years. Unless of course YouTube goes to shit, then that's a whole different conversation. But I was here when there was literally 1 or 2 people watching my content. Now, I started on YouTube almost 5 years ago. And at that time, I used to have like maybe 10 or 15 views on a video. So the fact that I'm getting now thousands and thousands of views, I also get a lot of questions from you guys. And one of the biggest questions is, Ravi, what do you actually think is gonna happen with the market? Just tell me straight up. And we have these conversations in the office as well because there's people wanting to buy property. Within the team, they're trying to buy property. They're also speaking to people who are asking these questions. They're like, what does Ravi think? Because they obviously can't talk to me directly. So I thought the next best thing would be to come out to you guys and talk to you like we're sitting at a dinner table and having this discussion. Now let's cover off the two perspectives. Number one is my personal perspective, and then number two will be the buyer's agency perspective. Now personally, I hold quite a bit of debt. And I'm comfortable with that level of debt because of where my income is, but also how I've been able to build this over a period of time. Now you've got to think, the properties that I was purchasing, say 11 or 12 years ago, they were about $200,000 to $250,000. Now those same properties are worth sort of $500,000 to $550,000. What's funny is that back then I used to have interest rates of about 7%, and we're back to square one where interest rates are anywhere between 6.5% and 7.5%. So for me, I've gone through the cycle. I've seen where interest rates were really low and that had its own pros and cons, and now interest rates are pretty much normalized in terms of the long-term average. Now, do I think interest rates will come down? Well, I'll get back to that, but I'll give you some more context. I've been investing in property for the last 11 years. I will continue investing in real estate being the largest portion of my portfolio, but the portfolio and the direction for which I take has definitely changed. It's adapted over time. And the reason for that is because I've gone from working at a job to then working for myself, having different businesses in different industries, and now for the better part of almost 5 years, running something I'm the most passionate about I've ever been in my life. And also more recently with Search Property, we've gone from a team of like 4 or 5 people 12 months later to have over 40 full-time staff. So that in itself has pros and cons as well. So I'm one of the unique few that have a buyer's agency, have a real estate company where I've actually built my portfolio before I even got into this industry. And the reason I did that was because I felt like I didn't have enough credibility. I felt like I wanted to go out there, go through the challenges. What are the pros? What are the cons? What are the mistakes I could make? And then eventually, when I did start up my buyer's agency, I could go out there and help everyday people like yourself. And that's exactly what's happened. Whereas I think everyone wants to be a buyer's agent now, and a lot of them have built property in the last 1 or 2 years. In addition to that, a lot of them are buying property because they're making a shitload of money through their BA. And in that case, it's not as relatable to you guys because if they're making $500,000, $600,000 from their business, and that's the only way they could go and actually build a portfolio, it's not as relatable as to when they were working for $80,000 or $100,000 and building a portfolio that way. That in itself has its own challenges. Now, of course, if you're self-employed, that also has its own pros and cons, but I think it's just different. Now, for me personally, with the amount of debt that I hold and actively being in the market again, finally being able to purchase property after having invested so much into the business so that we could help more people like yourself and of course create jobs, is now I'm saying, well, if interest rates do come down, personally, this would be amazing. Because for every 1% that the interest rates drop on $1 million worth of loans, you would get $10,000 in positive cash flow. So what I mean by that is if you've got $1 million worth of debt and it's at 6% interest rate, that means you're paying $60,000 a year in interest repayments. But if that went from 6% down to 5%, that's a $10,000 difference or $10,000 savings in this case. So if you're in a property that's negatively geared by say $5,000, if there's a 1% decrease in your interest rate, you'll go from a $5,000 deficit to a $5,000 positive cash flow situation. And so imagine for myself where I'm holding millions and millions worth of debt, I'd be very incentivized to have the interest rates come down, and I really, really hope they do. Now at this point, you're probably like, well, that's sort of expected. Like I knew you were gonna say that, you hold debt, you want interest rates to go down, so that makes sense. In most cases, with the interest rates coming down, we'll probably see prices go much higher as well, which again, puts me in a stronger position. But this is why I have a unique perspective, because I also run a company within the same industry that I'm largely exposed to as an individual investing in that. When I flip over to the buyer's agency side, I have a view that almost contradicts what I want on my personal front. And to a certain extent, even on my personal front, the longer interest rates stay higher, the more time I have to be able to accumulate undervalued assets. Because I honestly believe land in Australia is undervalued. Despite prices having gone up by so much, I still think it's undervalued, mainly because if you've gone out there and traveled, I don't know if I'm biased or not, but Australia is the best place to live in this entire world. And I would go on to say Sydney is freaking amazing, but again, I was born here and I've only ever lived in Sydney. But I have traveled a lot, and more recently I traveled to the US. And I can tell you now that my perspective on traveling to 35 countries over the last 10 to 15 years has told me one thing: home is home. Sydney is by far the best, but it comes at a cost. And the cost is that our land and our houses are so ridiculously expensive that it's so hard to live here. And the cost of living has definitely not helped. So when I put that into context, I'm like, well, if things are still undervalued, I would want to go out and get as much as I can so that I can not only feed my family, but everyone else in my extended family, to give them the life that they couldn't actually achieve themselves. I also don't want to put my kids in a situation where they're not going to live close to me, and that would only happen because they can't secure land here in Sydney. Trust me, I've definitely thought about just moving overseas. I'd be able to save so much in terms of costs, especially from a housing perspective. But to me, I love my family and I want to be close to them. Now, flipping over to the buyer's agency side, if interest rates do come down, it will mean that so many people that are sitting on the sidelines will be finally able to enter. Now, there's a couple of people that could enter. Number one are the people that are scared because they think interest rates will continue higher, or that because they're so high at the moment, it just makes no sense to be able to get in because in case there's another interest rate hike, I'm screwed. So these are the people that can borrow, but just don't want to enter. Then secondly, there's people that can't borrow, but really want to get into this market. And that might be you, because the majority of people are waiting on the sidelines, having seen prices go up. They want to get land, they want to get houses, and they're like, well, I can't because interest rates are so high, I can't get a loan from the bank. And because of that reason, there is so much demand sitting on the sidelines that is going to enter when interest rates cut. Now, from a buyer's agency perspective, this could be the best thing ever because it would mean the floodgates open when it comes to clients wanting help. Now, that would mean that there's huge amounts of demand, but is there going to be enough supply? Because a lot of people might just go, well, I don't want to sell my house anymore. Interest rates have started cutting. I might find myself being able to hold this for much longer. I might also feel like, hey, prices probably go up because interest rates are lower, so I'm just going to continue holding. And what that means is it dries up any available supply. So we can't go out there actively source property, and if we do, we're probably having to pay way above market value just to secure something. A lot of other buyers agencies are already in this situation. They're struggling sourcing property. I've seen some of the deals that we're going up against some of these other guys, and they're paying way above market value just to secure something. And if you think about it, for us, on average, we would get a client in and out within the system of purchasing a property from the time they sign up within 3 to 5 weeks. That is extremely fast. And that's because our relationships are deeper, we have such a good brand, and we have such a good process when it comes to securing a property, getting details across, and having the conveyancer work with us. There are other buyers agencies, whether they're small, one-man shows, or other companies that are quite big, they are on average finding property between 8 and 14 weeks, which is almost 2x the amount of time it takes us to find something. And the main reason for this is because supply is a real concern. So if we see interest rates go down, on a personal front, I would absolutely love it because my cash flow goes into a really good situation. Any of the other debts that I've taken out will then reduce in terms of how much I would have to pay, and that would put me in a better position. It probably means that the market's absolutely rip. We have the share market, crypto, all going up at the moment, and also house prices moving higher. But from a BA perspective, it will open the floodgates and we have all these clients wanting to buy, but from a supply side, we may not be able to find what we need to find. And when I say we, I say an industry as a whole. Now, one thing that could counteract this is that when interest rates do fall, we usually see transaction volumes increase. So people wanting to sell their homes, downsize, upsize, they do that when interest rates go down. They also do that when there's also certainty in the market. And so when we find ourselves in a position where inflation's been tamed, we get to normal times, even if interest rates just drop by 100 basis points and we sit at an average of 3.5% or 3% in terms of a cash rate, which means the interest rate's probably closer to about 4.5% and 5.5%. I think people will be okay with that. I don't think anyone right now is sitting there expecting interest rates to go drop back down to 1% or 2%. So as soon as we have a lack of volatility in the market, I think that's when we see the next leg up because people will go and transact a lot more. I think one of the biggest things that, although on a personal front absolutely killed me because, I couldn't get a loan at certain times. I also know others couldn't get a loan. With APRA coming in with stricter banking conditions and lending restrictions, I think what it's done is it's made our foundation here in Australia a lot stronger when it comes to houses, home loans, and how they're allowing people to purchase property. Having the buffers in place, not just from APRA, but also from banks themselves when it comes to their calculators, I think is actually a really good thing because it means the foundation that we can build off to the next leg in terms of prices going higher is more sustainable. Now, I'm also in a unique position because I own real estate as an investor, but I also rent. So on the flip side, I've also seen my rent increase by a lot. And I just got an email yesterday saying that they're going to increase my rent by more than 20% on the next hike. So from the time I've come into this apartment to now where I probably will end up is going to be an additional 40% increase in just 3 years. So I definitely feel the pain when it comes to high interest rates, not enough supply, and being a renter. I can see it from that perspective too. So these are the couple of things that are going through my mind. If we do see a market collapse, what does that look like from my own portfolio? But also, what does it look like from my business perspective? And this is why it's something that if you want to follow along what my deep thoughts are, I would go on to say that you should subscribe to not only this channel, but subscribe to this channel. This is my vlog channel and it's where you're going to get the raw, unedited version of Ravi. This is where I'm going to be talking to you about everything that goes through my mind, my opinions on the market, but also what am I doing personally in terms of investing. And when things change within the business or my personal life, you're going to find it there a lot sooner. And I feel like that's more of a personal journey. Whereas on here, yes, I will share my personal journey because it's personal finance with Ravi Sharma. I want to sit here and educate you guys, give you as much value as possible with facts and figures. I hope you guys have enjoyed a different take on the market as well as a different type of video on the channel. If you have, let me know in the comments down below. Smash that like button so I know that you guys want more content like this. And if you don't really like the video, then let me know as well in the comments. I'm sure you will. I hope you guys have enjoyed this video. If you have, smash that like button, subscribe to not only this channel, but also my vlog channel, which I'll link in the description box below, or you can simply search up Get Personal with Ravi Sharma, and I'll catch you guys in the next one. Thanks, guys.